It was a Monday, the 16th of November last year.
Share market has closed early after a technical glitch impacted trade. The ASX 200 surged to an 8-month high at the open before a tech meltdown triggered the market's longest outage in 4 years.
The unthinkable happened. Australia's stock market stopped. A vital cog in our economy turned to black. Share trading was disrupted for a few days afterwards. Australia's no third world country, used to such outages. Indeed, the ASX has always been noted for being at the global forefront of technology, but not this time.
Until we had that outage, we'd had the biggest outage-free period we'd had in our history. Being a technology company to a degree, we have technology incidents, and those incidents are down close to 80% over the last 5 years.
The ASX boss blames the outage on a new piece of software that suffered a glitch.
This is something that, within sort of 30 seconds of something going wrong, it's almost like everyone knows about it. So the important thing is, I think, is that we apologise to everyone in the market because we understand how difficult it is when one of these things happen. And the important thing is that we learn from this.
No one has been sacked over the outage. And 3 months later, the ASX is still doing a root cause analysis.
We're doing effectively an investigation into what happened. You have a situation where a piece of technology and there's a piece of logic in that has failed. And so we're going back over to find out why that happened.
Yet there is irony in this outage, because the ASX 3.5 years ago announced world-leading technology to use blockchain as its key security system. Yes, blockchain, the same technology that drives Bitcoin and keeps its users' ownership safe. It was a shock in 2017 when the ASX announced it would replace its clearinghouse electronic sub-register system with a blockchain-based ledger. In the ASX's case, it will store a record of every equity trade conducted on the market.
You create an environment where trust is paramount and transparency and visibility of all the transactions become a fundamental building block of a business transaction. And that's where a distributed environment using blockchain technology is a game changer for anyone who's considering a multi-party, transparent and trusted, but at the same time immutable registry. That's where blockchain will come quite handy.
Handy maybe, but there's a problem. The CHESS system started in 1994. In technology terms, it's a dinosaur. The blockchain replacement was supposed to be up and running by April this year, except it's not. It's been pushed back 2 years to April 2023. And it's costing the ASX plenty. Capital expenditure escalated to $115 million this year, from $50 million 4 years ago, because of the blockchain project and the network outages. But the ASX boss says the delays are because the busiest days on the market are now much larger than ever envisaged.
If you go back to 2017, to use your date, when we actually put that together in 2017, the peak day on the market was about 2 million trades. The peak day on the market is now 7 million trades. So when you're building a system and the world around you grows by 350%, sort of whilst you're in the build phase, you've got to re-look at that and say, hold on, we've actually got to change effectively the scaling of the system.
So another year of build time for the blockchain system. Is the main issue share trading volumes? Is that what clients have problems with?
Most of the build is done. It's actually, I'd say there's quite a bit more time around testing and more time around just allowing there to be greater throughput, and then, allowing things that might be manual processes now to be, can we actually have the ability for this to be digitised?
If your CHESS system had been replaced by the blockchain technology, would this outage last year have ever happened?
No, because that in the CHESS world, it's the clearing and settlement piece. It's sort of what we call the post-trade world. So this is really around the ASX trade piece of technology, which is sort of like a NASDAQ system that is run in Hong Kong, in Singapore, by NASDAQ. Tokyo runs a piece of it. The Nordic exchanges run that software, and that's the trading platform. And that's a platform that handles, for us, probably about 100 million orders a day.
It seems the ASX had little choice but to push back its technology platform, and it now has to hope its trading system that has had the outages in the past few months can hold together.
Technology aside, creating or upgrading a nationwide critical infrastructure would require that level of caution, no matter what technology choice you have. being able to cater for unprecedented volumes and volatility in the market, complete new investors coming to market, that's just necessary. And I think taking a more conservative approach to this is, in my opinion, is the right approach.
Meantime, ASX is confident the blockchain system will be up and running on time. Well, the new time, actually 2 years late.
Most of the system is now actually completed. It's really more of a testing, integration, working with customers to make sure they're connected and that sort of thing. And probably from sort of like the halfway through this year to the end of next year, it just goes really to delivery phase, and that's been extended out to give people more time to do that. So I think we've got the time to make that happen.
Just so long as the market doesn't turn to black while we're waiting. Edward Boyd, Sky News.